Hey everybody, welcome back to the channel. It is December 1st and Palantir is crashing. Now, I'm going to do a couple things in this video. Number one, I want to talk about why the market is actually going down a bit and why that's negatively affecting Palantir. And number two, and most importantly, I really want to stress a little bit more time on talking about what it means to be a long-term holder. If you're seeing the price crash down right now, so we were at like 27 3 weeks ago, we're at 1981. I think we hit a low of 62 today. It might go down to even the 18s, right? That might not even be support. There's a couple things to think about in terms of why this is happening and the logic of where it's going to go. And then second of all, the mindset you need to have when something like this happens. Number one, the whole market is red. So it's important to understand that every stock, besides Apple for some reason, I don't know what a deal Apple has with the stock market, but we're talking about Affirm, Teladoc, Arc Innovation, Opendoor, SoFi, Skills, Peloton, Robinhood, AMC, Coinbase, Lilly, even Tesla's down today, GameStop. We're talking about all the sort of major stocks, Amazon, Facebook is even down about $30 today. When the whole market is red, you have to recognize that the stock you're invested in is also going to go down. Again, unless you're Apple and you have some deal with Wall Street or whatever company you're invested in is likely going to suffer from the market, especially when the entire S&P is down. So when you're down in a stock, right, and when the entire market is going red, you should really find some solace in recognizing, oh, everyone is suffering here, so I'm also suffering. And again, suffering in the sense of my stocks are red because when the entire market goes red, you have hedge funds, institutions, and individual day traders that are shorting the crap out of the market because they're trying to find more and more entry points by which they can trade it down from like 460 to 461, and they're trading with sometimes hundreds of thousands of dollars to make tens of thousands of dollars on that short trade that they do. So it's really important to recognize when you're short the market, you're betting that the market's going to go down. And when the market's already free falling, more people are feeling that they're going to lose money. So they start panic selling, which means it leads to more free falling. And that leads to short traders making money. If you're not trading the market or shorting the market in that perspective, and you may be asking, well, why don't I do that if that makes money? Because that's incredibly risky and complicated to do versus just investing in a company and holding it for the long term. Then you need to just relax. Second of all, the Omicron fears, right? Now, I might do a video going a little bit more deeper into this, but the Pfizer CEO said that their vaccine isn't helping it as much. And the Regeneron CEO also said that their drug might not be the most effective against it. So the market is also kind of reacting to the fact that, oh, if this does start to spread and it's a little bit more contagious than the Delta variant, then we might have to sell our stocks, right? We might have to reevaluate our positions in companies. That's a normal thing. Now, will it be big? Will it not be big? We don't know. It's probably going to take another 2-3 weeks for the market to really price in what's happening, and we need more data on this virus. But until that happens, you're going to have to go through some pain because the market is unstable. This is a very volatile piece of news, which is going to make the markets volatile. The whole point here when I'm going through these reasons is to get you to understand the logic of why this is happening, more so than to fearmonger or anything, right? Like the world and the media will try to fearmonger you. It's important to understand why these things are happening, understand the logic at its core, and then go from there. Number three is tax harvesting season. A lot of people going into December want to save on their taxes. So if you're already down, let's say $10,000 on Palantir and you don't really know about the fundamentals, you don't care about it, you just put some money in it because you said, whatever, I put money in it, and you want to save $10,000 on your taxes because you made $100,000 and you only want to show the government $90,000, then you just sell it, right? And you take that as a loss. And a lot of people do this, especially people who have big accounts, because it's sometimes much more easier to sell the company versus wait for the money to come back because you literally save more cash on your taxes and you can buy the company later just by taking it as a tax loss. So it's very important to understand what tax harvesting is and why it's happening going into December. A lot of people said there may be a December rally, and that might still happen, right? It's only December 1st, but a lot of people are definitely tax harvesting and they're taking advantage of the policies to sell their stocks right now so that they don't have to show that much income to the government, so they pay less money. So those are the sort of three overall macro level reasons why the market is going down right now. The entire market in general is red, and when all stocks go down, more people short the market, which gives them an incentive to get people to panic sell, which is continuing to short the market, which leads to the stop losses that people have, which means that they set a limit at when they want to sell. So if Palantir hits like $19.50, there's probably a bunch of stop losses that are going to be on a bunch of accounts, and they're automatically going to sell stock, which is just going to drive the price further, right? That happens on a macro level when it comes to the market as it's crashing. Number two is the Omicron fears. People are afraid. We don't know what the virus is. There's instability. And number three is tax harvesting. Now, what does this mean from a mindset perspective? It's really important to understand what you actually think about when it comes to a company. Are you a short-term trader or are you a long-term trader? And when there's instability, when prices are going down, this is when you actually figure out what you're in it for. Are you in it for the short term or are you in it for the long term? If you actually believe that Palantir is a 5-year company, 6-year, 7-year company in which you think you can make 100 to 300% on your investment, and you believe in the growth curve, you believe in the exponential nature of the company, then this shouldn't mean anything to you. Like, especially when you know why the entire market is crashing. If anything, it should mean that this is a major opportunity to start dollar cost averaging, start seeing if it gets down to 18, 17, start buying more. The problem that people have when this happens, and I've been investing for 3 years, so I understand this. I'm not an amazing investor, but I understand the psychological drama that happens because I've been through some of the psychological drama over the past couple of years. So I just have a little bit more of that experience, is that you start to question why you even made the investment in the first place. And everyone, your parents start to ask you why you did this. Your friends start to ask you why you did this, right? Your friends are like, what, like, why'd you do that? Why would you put that much money in there? But you knew why you did it in the first place, right? There was a fundamental reason for why you chose to do what you did. So if that fundamental reason has not changed, then there is not a reason to start doubting the investment. If the fundamental reason did change, then you should start doubting the investment. Then I believe you should start really evaluating. There's a question of if you doubt the investment. So for example, there's people who invested in Dogecoin, right? And when Dogecoin was at 70 cents, they were like, Dogecoin to the moon, blah, 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 blah. They get all in on Dogecoin. That investment wasn't made on fundamentals. It was made on, if it went to 70 cents, it might go to $1. I can make 30 more cents if I buy it at 70. But now it's at 20 cents. And now people are like, well, why did I make that investment? The people who are staying in Dogecoin, the hodlers of Dogecoin, genuinely believe a variety of catalysts are on the way. For example, Tesla accepting things in Dogecoin's efficiency becoming stronger and faster, and making it the most fastest transaction speeds in terms of a cryptocurrency that exists, even faster than like Bitcoin and Ethereum, etc. There's like genuine reasons people that invested in that currency believe in the long-term trajectory of that currency. Then there's other people who just invested because it was a meme. And those are the people that are really suffering right now. Forget even financially. They're suffering more from their mental health perspective because they're like, oh, I did this investment. I didn't know why I did this investment. It was just doing it. I threw a bunch of money in here thinking something would happen. And now the money's gone. And now I either have to take the loss, which sucks, or I have to wait for it to come back. But they don't have the patience to wait for it to come back because they didn't make an investment on a fundamental reason in the first place. They didn't have conviction when buying it. It was just a silly buy. If you bought Palantir as a silly buy, or you wanted to ride it from like, I don't know, $22 to $26 and sell it, then you're probably suffering right now. And to be honest, you kind of deserve to. I'm not saying it in a mean way. I'm just saying that if you bought the company, and I would deserve to if I bought a company in that same mindset as well. But if you buy a company with the intent of just swing trading it and then it goes the other way and now you're stuck, then you're stuck, right? That was a bad investment decision. That's things you need to learn from with experiences, and all of us go through that stuff. But if you bought Palantir because you're like, 5 years from now, I think this is going to be one of the most important 10 years from now, this is going to be one of the most important software companies in the world. I have 10, 15, 20, 30, 40,000 bucks right now. I want to park it somewhere where I know there is a potential chance for it to get somewhere. Then that's the decision that you made. Now, and because you don't lack the fundamentals, then you really are secure in that decision. Now, obviously, the trade-off here is, I could have put it somewhere else. And that to me is a very dangerous mindset. You need to get rid of that mindset if you have a long-term mentality. Because like, I could have put all my money into Apple. I would be up like $6,000, $7,000 right now if I didn't put it into Palantir and into Apple. But I didn't put it into Apple, right? So it's like, it's kind of like life, right? You can't go back on the decisions that you made because you made those decisions with the best resources and time and energy that you had when you made the decisions. So when you invested in Palantir at 25, 26 bucks back in September because you were like, I really believe in this company, you didn't know that in December the whole market was going to go red. And you don't know if in December the market rallies. And then you look like a genius if we get to 30 by the end of the year because then you're way up on your money. So when you're in these situations, it's incredibly important to not look at the trade-off or the opportunity cost of where your money could have been. Because in general, that's not a productive mechanism for life. And a lot of stock market investing is psychology. I've learned this the hard way over the past 3 years. And that's part of what I want to do on this channel is give my analysis, give my thoughts on things, and help people sort of recognize some of the ins and outs of the markets based on my experiences. When you are in a psychologically vulnerable state, you need to stop looking at your portfolio and seeing all the money that you're down on that you haven't even lost. That's just like paper red or whatever, right? It's like it's paper money. When it'll come back up, it'll come back down. That's the nature of stocks. You have to be ready from a mental perspective to understand that. And number two, you have to recognize when you made a fundamental decision on a company, there is no looking back and saying, I should have made that fundamental. Like there's a trillion. I should have invested in Roblox when it was at $70 the day before they announced earnings and it went to 120, right? Like if you can play out all these scenarios as many times as you want. I should have done this major in college. I should have talked to that girl. It's like, but you didn't. You did what you did at the time that you had. And the mistakes you made, if they are mistakes, should influence the future of how you consider doing things in the world and decisions you're going to make. But they should not be crippling you to the point where you feel like you've made such horrible decisions that you are now a unworthy human being of making future decisions because the decisions that you have made in the past overdetermine the capacity for you to make meaningful decisions in the future. That doesn't make sense. Final thing I'll say here is, again, when you're having a long-term mentality, it's really important to not get into the nitty-gritty short-term. And what I mean by that is like not read every single article or every single subreddit about what's going on right now. It's important to have a community, and there's a bunch of like Palantir Discords you can join and stuff and like talk to other people and share in some of the common suffering. But it's not something to be like obsessed with, because you're doing this if it is for the long term. So as long as you put money in there that you can afford to lose again with air quotes, meaning you don't need to have access to right now, then let it chill, let it relax, and focus on other things. And honestly, focus on getting money from other ways and other your side hustles. Like, go focus on something creative and go doing what you want to do, not staring at the market all day, especially when you're in an investment for a very long time, which is what I'm doing. I'm running a startup and I'm just focused on my day-to-day tasks of running the startup today. But I wanted to make this video because I'm like, yo, it's not a big deal. Like, if you've been in the market for a while, okay, things are down. Cool. Like, moving on with my mindset and my day, because I'm not going to let a stock price going down ruin my entire day or my entire week. That just doesn't make sense. So overall, those are my thoughts on the market crashing right now. I hope this explained some of the logic for why it's crashing, and I hope this explained a little bit of analysis from a psychological perspective on what it takes to be invested in a stock and not cry when the stock starts going down just because you didn't expect it to go down, and not worry about all the opportunity costs or trade-offs that come associated with not investing in other companies. You can't always have it your way. You got to deal with it. You got to move forward, and you got to understand that if the fundamentals in the company haven't changed, and I've made a lot of videos about why the fundamentals of the companies are very intact, and more videos are coming soon, then you're going to be fine in the long term. Thank you guys for watching the Daily Business Show. My name is Amit. I'll see you in the next one.